Hello guys, welcome to the market channel. And in this video, we are going to be talking about trading made simple. Or let me just say technical analysis made simple. And the reason why I call it made simple is because you just need to know some stuffs in trading and some technical analysis idea, which I will cover up in this video. And once you're able to have a strong business idea of this, tools of this knowledge, then it will be easy for you to make any market and make money out of it. But because the main problem that most beginners or people that have been trading for so long but not profitable are having is because they fail to able to identify and have a proper knowledge, and which I'm going to be doing in this video. So sit sit tight and wait till the end of this video. So before I continue, if you have not subscribed to this channel and are watching this video right now, click on the subscribe button and don't forget to put on the notification. Don't just subscribe, put on the notification so as to get notified on video like this and also more. Thank you very much. So let's get started. So what do beginners actually need? What do people they are trying to grow in trading, what are trying to that they are trying to become professionals? What do they need to be successful in trading? First, the most important thing, if you are not using an indicator to trade, but you only trade yourself, analyzing market, looking at trend, looking at structure, you all you need to do first, all you need to know first, if you are not using indicator, all you need to know first is understanding what market structure is very, very important and is very, very key for you to know where the money is going, for you to follow the money. It's very, very important for you. If you don't understand the middle structure, you don't understand the minor structure, and you're just trading market blindly, you are just playing with your money. But the only way you can do well is you understand market structure, you understand middle structure, you understand break of structure, you understand clearing of liquidity. All these concepts are what you need to know very well. But in this video, I'm going to be covering market structure. I will go down to the basic level. Even though you are trading for a long time, but you still find it confusing to know the difference between major and minor. I know break all these things we break down in this video. I'll break it down. So just sit down that it won't be long, just a few minutes. So let's get started. And also we have a WhatsApp. We have a Telegram group. The link is the link is in the description of this video. So don't forget to actually join our Telegram group. So let's continue. So let's quickly pick up these tools. Yeah. So let's assume we have something like this. I will just show you the demo and then go to the chart and show you how it looks like. Let's assume we have something like this. Coming, trying to establish some stuff. So let's just pray here. So let's assume market is like this, ranging and then breaking. So the question now is, first of all, let's start from this place. So the question we should ask ourselves, let's assume the market just come from here. Or let's say, no, let's just say it's come from here. Let's put it that way. So we start from here. Yeah. So the question you should ask yourself, where is the major structure? The major structure will be the start of that trend for here. So there is the major high. This is the major high. So I assume you already know what it calls. I assume that you already know what is called higher high, higher low, and lower high, lower low. I believe all traders should know that. So this is the uh major high, and this is the major low. Do you understand? So whatever that is happening in between whatever is happening in between this major high and major low, eh, and this major high is not broken and this major low is not broken, whatever that is happening between are just minor structure, just minor structure movement. That's what they are doing until the major high is broken or the major low is broken. So now, while market was in between this level, you can decide to trade the minor structure in line with the major structure. What I meant is that let's assume that the major structure was bullish. Do you understand? Let's assume it was bullish. So if the major structure is bullish and the market is now moving in between the previous high and the previous low, that is in between the major high and the major low, we can decide to look for a long position in accordance with the bullishness of the major structure. Do you understand? Because it's always easy and it's always good. It's good to trade along with the trend, the major trend. Because by the time you counter trade the major trend, you might be eating breakfast. However, multiple time frame is very important. Multiple time is very, very important in trading. Very, very important. So let's see if we're able to cover that also today. So let's continue. So what I was saying is that looking at looking at this uh range now. Now market broke down. When markets broke down, now the question now is, did the market break the major structure or not? Now this is the major low. The market broke the major low. Since market broke the major low, where is the last low? The last low is here before markets try to push back. So we can change this to this is a recent low. Do you understand? So when the market broke it, where is the high that broke it? The high that broke it was here. So this is now the new high. It has shifted. So whatever that happens in between this period is what is actually minor range, minor structure, minor levels, and the likes. So and you can also train along with what? With the major structure. Now it's broke down, it's bearish. You can decide to look for a short trade, pending the time it broke again. And don't forget, always take high probability trades. So now it's broke above again. So where is the low that broke it? So this is what broke it. So where is now the new high? This is now the new high. So whatever that happens in between here again is what is minor levels, minor structure, minor range, and the likes. But these are the major ones until the high and the low is broken. So that you should keep in mind. Because when the major structure is broken, it shifts the trend, it shifts the direction of the market, the major trend of the market. But when the minor structure or minor level is broken, it does not shift anything. It's only just the price might just be consolidating at that region. The price might just be gathering liquidity or forming distribution before making the next move. So I will show you an example on the chart so that you can understand what I'm saying. So I guess you understand the basic concept here. If you don't understand the basic concept here, when we get to the chart now, you will understand better. Let me delete these drawings. So now, I always love to use 4 hour. So this is Bitcoin. I can decide to go to any point, but let's just use the recent chart. So now the question now is, let's quickly, this is 4 hour chart. This is 4 hours. So let's quickly do our drawings. Let me just start from here. So this is the last eye. So that I will not waste my time because I don't want this video to be long. I want to short it. So that so let's start from let me just pick it from here. Let's start from here. Yeah. So price went up to this point, went up to this high, pushed down to this low. So and then what happened again? Price went up to this high. So now I'm coming. Let me also use this level. Let's use this here. Price pick up from here, went to this high, push down, and went to this high, push down, went to this high. So let me remove the other one I did. So good. So this is what we have here now. Now let's not start. Since we are starting from here, so let's pick up our tools. This was the low, right? So where is the high? This we have this initially we have this high, but this got broken above. So where is the new high now? This is the new high. So since this got broken, let's take off this. So the question now is which low actually broke it on 4 hour? The low that broke it, we have a range here. This is a range. So we drag it in. So now what do you call a range? It depends on your definition of range. My own definition of range is when there is two alternative candle in a particular range. Let's assume that, let's assume that where's my pencil? Let's assume that we have price was moving up, was moving up, was moving up, and then we have like two red candle, two or more, at least at least two or more red candle that is there, and then price started moving up again. So that is a valid range for me. This is a valid range. But maybe the price was moving up, was moving up, and then it did just one down candle, and then move up again. This is not a valid range for me. So that does it. So let's just go back to, so it depends on your own definition. So my own definition of a valid range is at least two alternative candle must be there. So the price was moving up. We have two red candles there. So this is where the break of structure happened. So the low that caused the break to the upside. So this is where it is happened. So there is it. So when now we now have our new high and new low. These are new major structure. So price is what is consolidating in between this area until until this area got broken upside. That is when you can continue chilling again. But because the price was bullish, the structure was bullish initially, breaking to the upside. So, like I said, you can trade along with the major structure. The major structure here is a bullish uptrend, is a bullish movement. So you can be looking for what? A bullish pattern, looking for areas to long, looking for high profitable region to long your trade. So that is you're expecting price to continue to go higher. And what happened? Price break above. Price break above. Once price broke above, where is the new high now? This is shifted from here to here. And now another question you should ask yourself, what are you using to determine a break of structure? Are you using a wick to determine break of structure, or are you using a body break? Personally, me, I do use body break as break of structure. I see wick as clearing of liquidity. So that was it. So personally, I use wick. Sorry, I use body break. The body of the candle that breaks that previous high is a break of structure for me. If there's a weak, I count that liquidity. I don't count that as break of structure. So then, since this is the new high, which low caused the break? So this was the low that caused the break. You can see it here. This region caused break upward. So the new range that we have was this area. You can see, like I said, always try to place along with the upper or the major trend. So which is still the upside. So price ranging until it's what? It's got broken. So the question now is, where is the new high? And it's got broken to the upside. So this is the new high. So which low caused the break? This is the range that caused the break to the upside. I broke this previous high. You can see it was the body break that broke this previous high. So this is the range that causes. So where is it now? Here is it. So many if this got broken to the upside, nice. And if it got broken to the downside, it means you are now bearish. What happened? It got broken to the downside, pushed back to this region. This is 4 hour. This region that I pushed back to is 1 hour or 15 minutes or 30-minute level. And then continue to short again. Short again, switch back. Now you switch back again. So now let's trace it. So then what happened again? Price pushed down and broke it. So when price broke it, we have our new low to be here. So what broke it? This is the high that broke it. So this is the high that broke it. And what happened again? Price broke down again to this low. So this is the new low. This is still the high that broke it. What happened again? Price broke down to this new low. And where is the high that broke it? The invalid range. This is what broke it. Now price break back up again. Is now bullish back again. What are you looking for again? Trading along with the trend. You'll be what? Waiting for price, looking for long opportunities in this region to what? To continue upward. Price did as expected and bounce up again. So now, where is the new low now? This is the new low. So this is the new high. If price will continue to break this, look for another continuation. Just like that is how you continue to move your chart. Continue to move your structure as it keeps breaking from one level to another, from one level to another. So you want to be able to know the difference between major structure and minor structure. It helps you to know, have a clear trend of where the market is going, where the money is flowing to. So I'll be stopping this video here right now. So you want no, we can't finish everything just a single video, or else it's going to become too long. So if you want more video, put it in the comment section, like this video, say you like it, and we'll make more video on it, and also tell you how to get entry on those region in a major structure or when price is in a minor structure range. So thank you very much. Wait, don't forget to subscribe to get our next session video on this trading made simple. Thank you very much.